Okay, we're about to pull back the curtain on a story that's been hiding in plain sight, right inside public financial filings. It's this fascinating trail of breadcrumbs that connects the largest asset manager on the planet to a tiny crypto company. And honestly, it could completely reshape the future of finance as we know it. So, where does it all start? It starts with one very specific number: 3,410,000. Now, what is this? This is the exact number of shares in a company called BitMine Immersion that were recently scooped up by a single buyer. And you guessed it, that buyer was BlackRock. And that right there, that's the billion-dollar question, isn't it? This is the entire mystery we're going to unpack. Look, this isn't some casual index fund purchase. When a $10 trillion behemoth like BlackRock makes a surgical, targeted buy in a small-cap company, that's not just an investment. No way. That is a message. And we are going to figure out exactly what they're trying to say. To really get why BlackRock made this move, you first have to understand the massive problem they're facing. And I'm talking about a huge, potentially criminal-level issue that's lurking inside their most revolutionary new fund. Okay, so the fund is called BUIDL, and everybody is talking about it as the future of Wall Street. It's actually brilliant. What it does is take super safe US Treasury bills and turns them into a token on the Ethereum blockchain. That means you can trade them instantly, 24/7. It is a total game changer. But, and believe me, this is a huge but, it has a fatal flaw, baked right into the way the blockchain works. And this gets to the absolute heart of the problem, the OFAC sanctions list. Think of it as the US government's official blacklist of bad actors. The law is crystal clear. American companies are strictly forbidden from doing any business with anyone on this list. And a violation? It's not just a slap on the wrist. We are talking about potential federal crimes. So here's BlackRock's nightmare scenario. Think of the public Ethereum network as a giant public highway. When BlackRock sends a BUIDL transaction, it just goes out into this big open pool of transactions. Anyone in the world running what's called a validator can pick it up and process it. So what happens if that validator is run by a sanctioned group in, say, North Korea or Iran? Well, if that happens, BlackRock has technically paid a small transaction fee to a sanctioned entity. For you or me, who cares, right? But for the most heavily regulated asset manager in the world, that is an existential threat. The CEO simply cannot take that risk. Okay, so the public highway is way too risky. What do? Well, you get someone to build you a private one, a brand new, purpose-built piece of infrastructure designed to solve this one very specific and very expensive problem. And this is where BitMine Immersion steps into the spotlight with their project Maven, which stands for the Made in America Validator Network. Now, for a long time, critics kind of laughed at this. They'd say, who cares where a validator is? Crypto is supposed to be global. They were missing the point entirely. I mean, the contrast could not be clearer. The public highway is permissionless and anonymous, a huge compliance risk. But Maven is the perfect solution. It's a clean lane built just for institutions. The servers, they're in secure US data centers. The people operating them, they're background-checked US citizens. And the killer feature? Every single block of transactions is pre-screened to be OFAC compliant. Maven provides the one thing no one else can, a guaranteed clean block every single time. So here's the crucial point. The theory is that Maven wasn't just some clever project they dreamed up. It was built to the exact specifications of an institutional titan. And once you see it that way, that whole 3.4 million share purchase looks completely different. It's not a speculative bet anymore. It starts to look a lot like what's called vendor financing. This is when a big company basically funds a smaller supplier to build a critical component that it desperately needs. You see? It's a strategic necessity, not some casual gamble on the stock market. This analogy just nails it. Think about it this way. BlackRock wasn't just buying a stock. They were effectively bankrolling the construction of their own private, compliant toll road on the Ethereum highway. They needed it to exist for their own multi-trillion-dollar plans to even work. Now, this is where things get really juicy. What does this all mean financially? Well, standard crypto staking is a commodity, right? It's a race to the bottom on fees. But compliance staking? That is a premium, white-glove service. BitMine would have all the pricing power. But the fees, they're just the appetizer. Then you get to what's known as MEV, or maximal extractable value. It's a complex idea, but think of it like this. Because the validator sees all the transactions before they're officially confirmed, they get a sneak peek at the market's next move. Imagine they see a massive billion-dollar buy order coming from the build fund. They could use that information to place their own trade just milliseconds ahead of it, guaranteeing an instant profit. With billions, maybe trillions of dollars flowing through, that little sneak peek becomes an absolute gold mine of hidden revenue. This potential partnership completely transforms how you value the company. They're no longer just some crypto miner. They become a piece of core financial infrastructure. I mean, just look at this. Visa built a secure rails for global commerce, and it trades at around 30 times its earnings. So if BitMine is building the secure rails for the new tokenized economy, why is it trading at just 2 times earnings? If this theory gets confirmed, that valuation gap could close with incredible speed. Now look, this is a very compelling theory, and it's backed up by some pretty solid evidence. But right now, it is still a theory. So the big question on everyone's mind is, when does it become a fact? So let's just quickly recap the timeline here. In March, BlackRock launches BUIDL. In May, they drop the bombshell filing about their stake in BitMine. Then you see other big institutions quietly start buying shares. It feels like it's all leading up to this one point, January 15th, at a big event in Las Vegas. The whispers are that this could be the company's official coronation. So here's what to watch for. These are the potential smoking guns. An explicit announcement with BlackRock? Okay, game over, theory confirmed. But the real tell, the absolute smoking gun, would be a partnership with a company called Securitize. And why them? Because Securitize is the tech company that actually built the BUIDL fund for BlackRock. A deal with them is basically a direct deal with BlackRock. It connects all the pipes. When you step back and you put all of these pieces together, it really does lead to a powerful conclusion. Those 3.4 million shares that BlackRock bought, that wasn't an investment. That was a down payment. It was a down payment on the future success of their own multi-trillion-dollar tokenization strategy. Without a solution like Maven, their BUIDL fund hits a hard compliance ceiling. With Maven, BUIDL can scale to the moon. You know, BlackRock has a reputation for one thing above all else. They don't lose. Their research department is legendary, and when they make a big strategic move, they do it for a very, very good reason. They just made a very big and very public bet. So I guess the only question left is, are you betting with them? The evidence is on the table, but the story is still playing out. And you can be sure we will be watching what happens on January 15th very, very closely.